let's get into it and get some more analysis because, as I said, the big ones today, BHP and Westpac. Westpac in particular ditching that interim dividend, saying it won't consider dividends until the full year. BHP are also in focus. Let's get more. James Gerrish from Shaw and Partners joins us live via Skype in Sydney. James, pleasure to have you on the program. Realise you've just trying to get across the huge amount of numbers that are hitting the wires this morning, but I will get your view on BHP because I know this is one that you follow quite closely there. It looks like a very slight miss. Just talk us through your view on the numbers, how it compares to guidance.
Yeah, your view's absolutely correct there, Ingrid. So it's a slight miss in terms of the profitability numbers for BHP. Revenue is pretty much in line. Mm-hmm. The market was looking for NPAT of around 9.16 billion. They've come in at 9.1 billion. EPS of $1.79. The market was at 182, and the dividend slightly light on. So I'd call it a slight miss in terms of BHP's numbers. Not materially so, but a slight miss nonetheless, Ingrid.
Yeah, okay. So, I mean, how do you think investors respond to this today? Because obviously the bottom line is that BHP's performed pretty well. The impact from COVID's been somewhat minimal. We know they're benefiting, or it's benefiting from supply disruptions in Brazil, China's strength and the recovery there. All in all, do investors punish the stock for a slight miss? I mean, how do you see this playing out today?
Yeah, well, it's had a pretty good run leading into the results. So, there's a lot of blue sky priced in the BHP at the moment. I'd expect the market to be, to sell it off initially, at least in terms of BHP this morning. It is a slight miss. Some of the numbers in the market were, there was some outliers in the number. I know Peter O'Connor here at Shaw was looking for a lot better result than was delivered today, a lot better dividend. BHP came out and said that they've paid out 72% of earnings in this 55 cents per share dividend for the half. There was a large impairment in those numbers, so they've based that on about 8.1 billion that they the underlying the profit number that they're basing that dividend on. So look, I'd expect the market to sell it down marginally on open this morning, Ingrid.
All right, well, we'll keep an eye on BHP throughout the session because certainly this is a big one that we're watching. In terms of how it compares to a stock like Rio and some of the other majors, James, do you have an idea of that? I mean, in terms of just who's performing best out of the majors at the moment?
So, I mean, look, across our portfolios, I hold Rio, I hold BHP. We've got a slightly heavier weighting towards BHP at the moment. Will I sell it on the back of this result? No, I think the underlying thematics that drive Rio, BHP higher still persists. So, this concept about the reflation trade, the concept about commodity prices going high, US dollar weakness, we saw it in commodity markets overnight. I think the commodity markets were strong, the copper price was strong, iron ore is staying higher for longer. So, I think the thematics are still there in play. So you can get a little bit caught up in the short-term numbers that BHP have or haven't delivered today, but it's only a slight miss, and I think the underlying thesis for these stocks remain.
All right, let's move on from that one then and talk Westpac. Quarterly number released today. Look, I guess the big thing here, James, is the ditching of the dividend, and they've said, it said it will not pay a dividend in the interim. Next time it will look at dividends is for the full year, so that has well and truly been ruled out for now in terms of the dividend. It can't come as a huge surprise, but certainly it's got to be a disappointment for investors.
Yeah, it's not a huge surprise. We didn't have an interim dividend baked into our numbers. Westpac have elected to, beef up their Tier 1 capital or remain Tier 1 capital at 10.8%. So they haven't sort of taken APRA's offer of the ability to go, dip into Tier 1 capital lower at this point in the cycle. So I think that's a positive. In terms of the update today, profit, the numbers were pretty much in line with our expectations. So for the quarter, profit came in about 527 million. We had 526 in our numbers. Expenses were pretty much in line. There was a slightly higher impairments came in at 826, was pretty much in line with our expectations. So there was a decent deterioration in net interest margins, but it's on the back of them holding more liquid, so that has a negative influence on NIMs. CBA did a similar thing when they announced results recently. So, look, I actually think it's an inline result for Westpac for the quarter. Obviously, some will be disappointed about the dividend. But as I said, we didn't have that baked into our numbers, Ingrid.
Yeah, I mean, the banks are an interesting one, aren't they? In terms of net interest margin, we've seen, we saw it with CBA last week. We've seen it with some of the regionals, obviously with Bendigo and Adelaide yesterday, although that's somewhat a different kettle of fish. What do you make of the banks when you compare them to one another? Because we have seen home loans obviously take a hit with the deferrals and what we're seeing in that particular scenario. I mean, are the banks one of the worst hit, would you say, from the coronavirus pandemic?
Yeah, absolutely. I mean, banks are a barometer of broader economic activity. They're so influenced by broader economic trends that, we've had a massive shock to the broader economy in Australia and more widely on a global scale. So clearly banks are going to be under pressure. In terms of thinking about them on a relative standpoint, so CBA is our number one pick, NAB's our number two, Westpac then ANZ. Westpac is obviously, Westpac had the weakest tier one capital and they didn't raise equity like NAB did. They, that's the decision that Westpac have made. Don't pay a dividend, but don't raise capital. So, if they can get through this period without having to raise a decent amount of equity capital, I think that's going to be a positive for the longer term thematic in Westpac. In the short term, NAB's more heavily capitalised. CBA is incredibly well capitalised. So, we're focusing more on the well-capitalised banks at this stage, Ingrid.
Just briefly as well, and I realise you probably haven't had any time to get across this because it's only just come out, but Coles coming out with its numbers more broadly, full year profit at 951 million, but it did pay a dividend of 27.5 cents a share. What do you make of Coles more broadly?
Yeah, in terms of the numbers that you just talked about, I was just listening to your numbers drop earlier. So, excuse me. So in terms of the revenue, that beat expectations. Expectations were 37.11. They came in about 37.4, if my numbers are correct, what you said before. NPAT, the market was at 935. They came in at 951. The dividend the market was expecting 28 cents per share. So they've come in slightly below in terms of the dividend, but it looks like a pretty good result to me. I haven't seen the guidance out of that one, Ingrid, but it looked like a good result for FY20.
Yeah, I haven't seen guidance from Coles either, so we'll keep an eye on that one. I'm not sure I can't see it on the wires here, but we'll get more analysis on it shortly. Just briefly, James, before I let you go, dividends. Yes, Coles paid a dividend, and obviously, we've seen them from some companies, but certainly the line we're seeing from a lot of companies this reporting season is will not pay a dividend, and that's compared to sort of the prior period where we did see a dividend. Do you think this is going to last, and how do investors respond to this? Are they somewhat, from clients you're speaking to, are they well prepared to not receive dividends from a lot of companies that they usually would?
Yeah, absolutely. So, just to give you an idea of the results out this morning that have not declared a dividend. So, Cochlear came out this morning with their full year results. It was actually a really strong result. So, they've beaten expectations by about 7%, but they're not going to pay a dividend. Estia Health, they've come in and missed expectations by about 7% on the other side. The market didn't expect a lot from this company, but again, they're not going to pay a final dividend on the back of that. Monadelphous wasn't going to pay a dividend. The market wasn't expecting a dividend in their results today. They've come out and paid they're going to pay a 13 cents per share dividend. They've also beaten in terms of the result that the market was anticipating. So, some are deferring dividends, but some are actually bringing on dividends that the market hadn't penciled in. So, swings and roundabouts, but you've got to look forward as an investor. We know FY20 has been a difficult year, and I'm of the view that actually, companies retaining some of these earnings is probably going to put them in better stead moving forward.
James, a pleasure to have you on the program. You've got a busy day ahead. Thanks so much for joining us first up this morning.
Thanks, Ingrid.